Now, look at example 7, the disposal of non-current asset at the end of useful life with monthly basis. A machine purchased on 13 January 2012 at a cost of 25,000 and useful life of the machine is 5 years and there is no salvage value. Depreciations by using straight line method. The company closed the account on 31st December every year. On 1st January 2014, the machine is sold for 20,000. Prepare a journal entry to record the machine's disposal. Before we calculate example 7, let's do some revisions. Sell means selling fixed asset before end of useful life of the asset. Gain or loss upon selling the asset is equal to cash received minus book value or net book value. Net book value refer to cost of asset minus accumulated depreciations. If the cash received is lesser than book value, it is considered loss. If the cash received greater than book value, it is considered gain. As we read through the example 7, we know that the machine cost is 25,000, useful life for machine is 5 years, and there is no salvage value. And this one we calculate by straight line method, and when the machine is sold with the price 20,000. The formula for straight line method is cost of asset minus scrap value over useful life of the asset. Now, come to step 1, calculate the accumulated depreciations. As we know, the machine is purchased on 13 January 2012 and disposed on 1st January 2014. So, for the first year, we know that the accumulated depreciation is 5,000. Second year is 5,000. As we dispose the machines on 1st January 2014, there is no depreciation expense, so this is 0. So total for accumulated depreciations is 10,000. In step 2, we shall discard the machine. Well, so on 1st January 2014, we debit accumulated depreciations for machine 10,000 and we credit machines that is name of the asset for 25,000. Then we record the sales in the journal. When we seal off the machine is with the price 20,000. So we debit cash 20,000. So here we got the balance 5,000. That means we have the gain on disposal 5,000. So this is to record the sales machines for cash at a gain. Well, how do I know it is a gain on disposal for the machine? We can look at here. If the formula gain or loss is sales minus net book value, so the sales is 20,000. This is the cash received minus the net book value. Net book value is the cost of machines 25,000 minus accumulated depreciations 10,000. So this is considered the net book value. You can see here the net book value is lesser than the cash received, as the net book value is 15,000. So this is lesser than cash received 20,000. So the difference is 5,000. So the 5,000 here is a gain of disposal of the machine. Let's see the account for machine. Okay, on 1st January 2014, we got balance brought down 25,000. This is the machine cost. So as we want to dispose the machine, so we record on 1st January 2014 disposal 25,000, and this disposal will bring to the T account for disposal and we debit machine 25,000. Then for the accumulated depreciations account, we will record on 1st January 2014 disposal machine for 10,000, and this 10,000 will bring to the account of disposal. We credit 10,000 here. So the accumulated depreciations will be closed on the balance brought down 10,000. Okay, so as we receive cash for disposal of machine 20,000, so we debit 20,000 here, and 20,000 here will bring to the disposal 20,000. We credit as cash. So here total is 30,000. So the balance here is 5,000. So this is the gain on disposal of machines, and we record it in the income statement. For example 8, a machine purchased on 15 January 2012 at the cost of 25,000. Useful life of the machine is 5 years, and there is no salvage value. Depreciation by using straight line method. The company closed the account on 31st December every year. On 1st January 2014, the machine is sold at 8,000. Prepare a journal entry to record the machine's disposal. As you see here, we know that the depreciations for the machine is cost minus scrap value over useful life. So cost is 25,000 and no scrap value minus 0 over 5 years. So we got depreciation expense for 5,000 each year. Now we go to step 1 to calculate the accumulated depreciations. So as we see, we know that we purchased the machine on 15 January 2012 until 31st December 2012. Depreciation is 5,000. So for the second year, 1st January 2013 until 31st December 2013 is 5,000, and the machine sells on 1st January 2014 for disposal, and here we got no depreciations expense. So total for accumulated depreciations is 10,000. Step 2, journal entry. So before we do any further journal entry, we shall discard the machine, discard the asset before we do the further record for journal. So we shall debit accumulated depreciations for machines 10,000 and credit machines for 25,000. This is the cost of machine, 25,000. So when we sell the machine, is at the cash for 8,000, and as we see here, we got the balance of 7,000 here. So the 7,000 here is the loss on disposal of machines. How do we know that? Now look at the formula given here. So to calculate the loss or gain on the disposal is the sales minus net book value. Okay, net book value is the cost of assets minus accumulated depreciations. So we can get this one, this figure. Sales is 8,000 minus 25,000 minus 10,000, and this is the net book value is equal to 15,000. So as you see here, the cash received is lesser then the net book value. So this is loss. So we lost 7,000 upon disposal of the machine.